is going on? I am Todd Bookspan, the founder of Win by Noon. On behalf of Dave Savage and the entire Mortgage Coach crew, welcome to our Friday Productivity Mastermind. I am really excited today. I've got my co-host, Jen Duplessis, who is here, but I don't see her on video. Good morning, Jen.
Hey, everybody. I am so excited to be here. I missed everyone. It's been like 3 weeks.
It has been a while, so we're excited to have Jen. We also have Dan Keller joining us shortly. So Dan is going to be rushing in here from a meeting. So Jen and I are going to make small talk and wow you with our brilliance up until the point that we have Dan on as our guest. And really the goal today is to talk to you guys about seizing the market. The market right now is really set up with opportunity, right? You've got a lot of you are in great purchase markets still, and we don't want to not look at that. But, you know, every couple of years we've got this momentum in the refi world. And I think that the feeling that Dave and I had ahead of this call was that some of you aren't taking advantage of that. And so what I want to do is interview Dan, talk about what he's doing, how he's using his database, how he's using Mortgage Coach, TCAs, and video in order to make sure that he's connecting with his clients and with prospective clients, how he's using that from a social media perspective. You know, any of you who've got questions, be put them in a Facebook Live group. I'm going to attempt to monitor that while Dan's talking and answer your questions there. And then, of course, we'll get some great feedback and input from Coach Jen. Any thoughts on that, Jen?
Yeah, I think it's great. I mean, I remember when everybody was so proud of the fact that, 95% of my business is purchase and 90% is purchase, which is great, which is absolutely great. But you are leaving so much money and opportunity on the table, and money, because when it's a refi boom, you can take on this extra cash, right? There's no doubt about it. And so we want to make sure that we're not, avoiding the low-hanging fruit that's there. The opportunity is that when you can help people refinance, whether they're in your database or people that you're referred to who are not in your database, you're losing the opportunity to manifest future opportunities to serve those clients and their friends, right? So it's not just going into your database and serving them, but it's also the opportunities that you're missing in being able to serve and grow your database. So that's the one thing that I want to talk about. And, I know Dan's probably going to be talking about this too. So it's one, to go in your database. It's the other to expand beyond your database so that you have those future opportunities beyond just the refinance that you're doing for someone right now. And as mortgage coaches, obviously, this is something that is perfect for us because we do annual reviews regardless if we originated the loan. At least I hope that's what you're doing.
Yeah, I totally agree, right? I mean, the whole adopt a mortgage thing is kind of hasn't been talked about in a while. So I'm so glad that you brought that up, where you're talking to somebody and you're saying, oh gosh, I'd love to adopt your mortgage and do a review. Yep. I also find that a lot of LOs who didn't refinance their clients or didn't keep in touch and do annual mortgage reviews, right? So Josh Metal talked about it. There's a clip down below in that Dave put up of the interview that he and I did with Josh and Shayla a couple weeks ago. And Josh said that he was told, hey, if you're not refinancing your database, guess what? Somebody else did. And if you missed it, hey, it is what it is, right? You apologize. Gosh, I'm really sorry that I wasn't there to take care of you. Let me get the information on your new market, because ultimately what Josh would tell you is that 80 some odd % of economists are predicting that we're going to have some type of a recession in the next 2 years and potentially a 0.75% drop in interest rates. So, you don't want to set up your current clients with that you're trying to refinance, because that might push the pause button. But the clients who have a loan that's not ready to refinance now, set that target interest rate set up now, so you've got that. And if you're using a system like Optimal Blue, you can set up a rate alert. If you're using a CRM, just put in the CRM, hey, what's the target rate, so that because that's really a great opportunity. And think about that. I spoke recently to one of the largest real estate teams here in Phoenix, Arizona, and the subject that the leader of the team was talking about that day was stranger marketing versus marketing to those who know you. And he talked about something that resonated with me, because I see it a lot in this community. People saying, what are you doing for online lead gen? And that's marketing to strangers. And he said, gosh, you know what? You guys are all so concerned about marketing to strangers, and you're not concerned about marketing to those people who already know you and like you and have trusted you, those in your sphere and your database. And so I think that is really, a big part of it. Keep in mind that you've got so many Facebook friends who, if you threw up a TCA with a video and said, hey, here's a success story of someone I just helped get out of debt, someone I just helped with a pool, cash out for a pool, someone I helped shorten up their terms so they could pay off their house faster, someone I helped save money, all those reasons you all know that you can do a refinance, that it really helps. I mentioned Marcy's the Wizard of Oz. She's the one behind the scenes here at Mortgage Coach who makes this all work for us. And it was funny, we were talking ahead of time and she said, I wrote it down, I liked it so much. She said that we have to be adapting to the current market, right? You guys have to adapt to it and help your clients adapt to it, right, Jen?
Oh, of course, and I've mentioned that before. I mean, dinosaurs and crocodiles lived at the same time. How come crocodiles survived? Because they adapted, so be the leader in the marketplace. Be the leader reaching out to your clients and saying, I don't know if you're aware of it or not, because most don't, but we're in a perfect opportunity. And I've already ran a TCA for you. I think this is a great time for you to consider refinancing. Right? And so be the leader. Don't be leaning back and hoping that, by default, people are going to call you instead of the person who's servicing their loan. Right? But by design. Right? And leaning in. And then, I'm hearing you about everything you're talking about for your database. And, I hear this all the time is I haven't talked to them in 7 years. Right? I love what Michelle told us almost a year and a half ago, which was making that phone call and saying, hi, it's Jen. Remember I did your loan, right? Don't say your company because you may not be at the same company. So say, remember I did your mortgage when you purchased your house? I bet you didn't expect to hear from me. Ha, ha, ha. Right? It's a very easy way for you to break that barrier and kind of suck crow, right? Instead of saying, hey, look, it's my fault, which you could say, but it's a great way to make that phone call. But more importantly, go ahead. Go ahead.
I was going to say, you can always apologize too. I'm really sorry I haven't kept in touch. And then the other thing,
of course you can,
is you mentioned servicer versus your loan officer, right? And so what I'm finding when I'm talking to people, I mentioned it a couple weeks ago on the call, I've been training my brother-in-law to go after my database since I stopped doing loans, and he's calling my past clients, he's calling my business partner's past clients, and he's calling some loan officers who are not on our team anymore, their past clients. So he doesn't even know these people, and he's calling them. And again, it's the whole idea that they think their mortgage company is their servicer. And so I've trained him to say, well, gosh, yep, they're your servicer. They're the person who just makes money by cashing your check. Hey, we're your mortgage company. We're the people that are proactively manage your
right. We're managing your mortgage. Yeah, that's it. And we're managing your liability. It's just like a financial planner. They manage their assets, and we're managing the liability. Before Dan gets on, I want to make sure everybody also knows that if you don't have a large database, okay, and you're saying, well, I can't call them all the time because I ran out of people to call. You don't have a large database. This is what I was talking about before, is becoming the, managing everybody else's loan. And the whole Adopt a Mortgage, when I started doing this is when the credit crunch came, so many people came into me, with just tears and what do we do? They're upside down and the short sales and foreclosures and whatnot. And that's when I started saying, way before anybody brought this up, was, are you orphaned by your last lender? Because they sold you a product, sold you a rate, never showed up at closing, and they've never been heard from since, right? All those builder loans, if you're not a builder rep, right? Because if you're a builder rep and listening to this call, you are calling them, right? Calling your past clients. But all those subdivisions where there's a builder rep, all they do is the purchase. They don't do anything behind it. Why not adopt a neighborhood, right? Why not every time that you're out networking, asking someone, hey, do you live around here? Yeah, I do. Are you renting or are you owning? Because if they're renting, you can put them in your home buyer club and do a series with them. Or if they're owning, you can say, well, who is managing your mortgage? And they're automatically going to say Wells Fargo, Bank of America, right? And you say, okay, well, that's wonderful. They're actually servicing your loan, but who's managing your mortgage? Who's providing you with timely updates with what's happening with the market and assessing your entrance holding and exit strategy? Who's helping you with that? And they say, well, I never had an entrance strategy. I never had a holding strategy or an exit strategy. Well, I would love to adopt your mortgage. I would love to manage your mortgage. And it's a complimentary service that I do for everybody because it's important that you have an expert to be able to reach out to. So if you want to double the size of your database, start asking everybody you're talking to who's managing their mortgage. Are you managing the mortgage of all of your referral partners? All of them. I don't care if your realtor went to somebody else and got their loan a couple years ago. I don't care if they got a refinance last month. That loan officer most likely is never going to communicate with them again. So let's take those mortgages. If you lose a deal to somebody because of rate, don't delete them and get pissed off. Make a note when they're closing and call them after they're closing and say, did it go well? That's great. I would love to manage your mortgage.
So talk about that for a second, because I always believe that our realtor partners are looking for a reason to call their clients. I think they're looking for a script. So what would be a script that you would give to your realtor partner, A, to ask them if they would call their database, and B, what would you ask them to say to their database?
Well, okay, I have two things for that. One is you can do this same thing for your realtors. If you're coaching your realtors, and which is what we're doing, right? We're coaching our realtors help their business grow. Who's managing their real estate? Because statistically, we know that clients will 87% of the time use the same realtor they use, but only 13% do because they can't even remember their name because they're not being in touch. So if that happens in real estate, it's happening in lending as well, right? So Absolutely. the realtor can do the same thing, can do the exact same thing. Who's managing your real estate? Well, what do you mean by managing? I mean, I take care of my lawn, and no. I'm saying who is managing your real estate? Who's giving you timely updates on what the values of homes are in your neighborhood and what the trends are for the accessories in your house, right? And giving you those timely updates. And it's great for us because we can be their partner in this, right? We can be the partner to help them grow. If they want to, oh gosh, I just lost the word. When they market it, farm a neighborhood, what a great way to go into a neighborhood and take over the neighborhood instead of sending a bunch of mailers and stuff, right? It's like, who's managing your real estate? I'd love to manage your real estate. And it's complimentary service, and here's what I do, right? And I'll provide you with an annual CMA on your home, just like we do an annual review. So we can coach our realtors to do that. But if the realtors are, and by the way, it's not just realtors, it's realtors, financial planners, that entire database that they have, that's what I want to do. I want to be the mortgage arm extension of your practice. I want to be the mortgage extension of your practice. And so you take care of the assets, financial planner. Realtor, you take care of the property, right? And assessing, the market value of the property and the trends in the neighborhood. I'm the mortgage extension of that. And so for them to pick up the phone and say, hey, you know what? I'd like to talk to you about a service that I want to provide to you, as well as a service that I have engaged with a colleague of mine and a partner of mine to also help you with your mortgage. So I would love to manage your real estate, because most likely they aren't now. I mean, truly managing it. They may have listed it and sold it and they're mailing stuff to them, but they're not managing it. So I want to introduce you to a new program that I'm doing. I'm offering complimentary to all of my clients to manage your real estate. And one of the great bonuses of this is that I have partnered with one of my special lenders, and they have also offered to, as a complimentary service, to manage your mortgage as well. And so you have to coach your realtor on, so what does that mean? So what they're going to do is provide you with timely updates on what's going on in the marketplace. They're going to do an annual review with you to ensure that you have a perpetual approval in the event that you're skiing in Colorado and thinking, maybe I want to move here. Maybe I want to buy a second home here. And so they're always going to be available so that you have an expert to go to for anything and everything related to your house. And then it's our job to help them understand why we're doing, what was your entrance strategy? Didn't have one. What's your holding strategy? I don't know. What's your exit strategy? Didn't think about it. Great. I want to talk to you about what all that was back then for your entrance. How long do you think you'll have the home? How long do you think you'll have the loan? And when you leave this home, is it going to be a rental? Do you want all of the assets or the proceeds from the sale to buy your next home? We may not have you may not be in the right loan in order to accomplish that exit strategy. And even though your rate is 3%, you might not be in the right loan.
I love that. One of the scripts that Josh had on one of his other interviews with Dave that I took note of was for that person with a 3% loan who thinks they don't need you, right? Remember, that's an emotional thing. They're really tied to that loan emotionally. And he just said, hey, tell me about the rest of your debt, right?
Everything.
Super open-ended question, right? Not specific. Tell me about the rest of your debt, because then you can do a debt analysis. If they have other debt, it is hard to separate someone, I think. What about you, Jen, from that cheap, expensive, low rate?
Oh, I think so. Yeah, I think so too. But I think, what you have to do is you have to uncover the real problems that they have now. The problem isn't the rate. Sometimes when people call you, the problem is the rate. They think they can save money, but we have to uncover. I mean, that's all that sales are, right? Is that we're uncovering the problem and we're providing a solution. The problem isn't the rate, but that doesn't mean that they don't have other problems going on in their life. What if, and I had a client like this a long time ago, with the credit crunches, he called and he said, look, I'm going into foreclosure. I lost my job. I'm going to foreclosure and I want to refinance. And I said, well, you don't have a job and you're late on your payments, so I can't do anything for it. He goes, yeah, but I paid the lender $100 extra every month for the last 7 years. And I said, oh, and he wasn't my client, right? Because if he was my client, he wouldn't be doing that. Right? But there's an underlying problem there that, the best rate in the world, but if you don't have a job and, or if you're starting to suffer financially, or that you're going to be retiring soon, I need to be in touch with you on a regular basis to make sure that we pull the cash out sooner rather than later, because their biggest problem is not that their rate is 3%. Their biggest problem is that their equity is trapped in the house and they need it right now. And so we have to help them see that they may have another issue that we could resolve and get them away from that emotional piece of that interest rate, make the other problem the bigger problem for them. Well, and it really does. It is a bigger problem, and and we can solve it. Even if you have to refinance into a higher rate, we can solve the problem. And that's what we're supposed to be doing as experts. We're not supposed to be selling a rate.
Yeah, I think it's pretty interesting, because I do find that those who haven't done mortgage reviews before are really hesitant to call their clients now. And if you guys watched the interview that Dave did with Brian Manning on Tuesday, it was like pure gold, right? I mean, Brian's one of my favorite win by noon users, and he's just so good with video. So I could see adapting his strategy where he sends out all these 19 to 21 second videos each week to his realtors to do a video for your clients and just shoot something out. You can do a generic. He does a video to every realtor individually, which you could do something like that for sure. But you also have this opportunity where you could create a generic video. Hey, I was just thinking about you. Gosh, it's been so long since we talked. I would love to just take a couple of minutes with what the Fed said last week and how that's going to impact interest rates, to catch up with you over the phone, to see if I can't lower the cost of your debt or help you in any other way. Super short, leave it that way. Maybe end with a call to action. Hey, just reply back with a time that you're available so I can give you a call. And then boom, you're off and running. And then just that to the cell phone number of all your clients, right? Or email it to the ones you don't have a cell phone number for. How would you improve that script, Jen?
Yeah, no, I actually love that script. But, I think you can, if you want to do a video, that's fine. But if you, it's like a CRM, what's the best CRM? The one you use, right? So if you're not going to do videos, you're like, I don't have time to do videos and I have to look pretty and I have to do all this stuff, then just do a text audio, right? Just do a text audio saying, hey, Todd, it's Jen. Over, at whatever company or, however you want to say it. Hey, it's Jen, your mortgage specialist, your mortgage advisor. The reason I'm getting in touch with you, and I love doing this too, by the way. Hi, Todd, it's Jen. Take a breath. The reason I'm calling is, let's make sure that they know why you're calling. I've talked about this probably 1,000 times, is that we ramble and they're like, why are they calling? Why are they calling? Why are they calling? So, hey, listen, the reason I'm calling is, I don't know if you know or not, but the Feds talked last week, and I want to make sure that you understand exactly what that impact could be on your mortgage. As I have promised, because I'm managing your mortgage, I'm going to provide you with timely updates in areas that could possibly affect what's going on with your mortgage or your home. So give me a quick call. I want to just debrief you, make sure you're on board with everything and that you're not in the dark. Can't wait to talk to you.
Love it. Love it, right? So think about these different scripts. And the best thing that Jen said, which you may not think is the best thing, is she said to take a breath, right?
Yeah.
You know, it's when I had Toastmasters years ago, the Toastmasters leader, who was he's a Hall of Fame speaker, would get up there and he's got these big pearly white teeth. He's 78 years old now, 77 years old. And he gets up there and he just looks around the room and he smiles, a big smile.
Yes.
Before he says anything, before he starts speaking.
That's commanding. That's commanding the room, and that's commanding the conversation. That's what it's all about.
Well, and I'm super guilty of the super fast talking piece. And so be careful when you're doing that to slow down. I kind of blame on the fact that I listen to all the podcasts and everything. Like I was listening to Brian Manning and Dave this morning on 1 3/4 speed. And so I think it's because I listen to everything so fast that now I talk even faster. And so now I'm thinking that I probably should slow down while I'm talking to all of you.
Yeah. Yeah. Well, I think that one of the more important things is to mirror your client, you know, and if you are truly nurturing and not neglecting your clients on a regular basis, right, then you know your client. If they're rapid, then you need to be rapid. That's why disc profiling is so important. I mean, that's a whole other issue, but that's why disc profiling is so important. Naturally, I'm rapid. So naturally I'm going to be rapid on a call like this because that's who I am, naturally rapid. But if I'm talking to a client who is slow and methodical, then I'm going to let them think that I'm thinking as I'm talking.
That's hard for me because of the fact that people fill it with those junk words like and as we're doing that. And so that's really
I didn't just now. I was just pausing and breathing. So if they are fast, mirror them. If they're slow, mirror them.
All right, so we're still waiting. I'm gonna check my phone since I'm the one on video, since Jen's not. I'm like, all right, I'm on.
Yeah, I'm on my phone today, so I can't get video for whatever.
I was trying to see if I got a message from Dan. I don't know what his ETA is, but we are expecting Dan Keller anytime now to jump in, and he'll wow us with his scripts and what he's doing. And so the goal really today, for those of you who kind of joined late, number one is if you're in Facebook, you're more than welcome to leave a question for Jen or I. We're happy to answer it, or a pre-asked question of Dan for when he shows up. Also,
so John just made a chat about that's gold right there. John, can you tell us what gold what aha moment you were having there? Because I'm just picking this up. It could have been from 20 minutes ago.
He said that right around.
Hopefully he can.
Said, who is managing your real estate? Which I wrote down and put a big old star around in my book because I felt like that was a great question to ask. But John, anything else you want to throw in there would be fabulous. Again, the key here, guys, and the questions we love is I'd love to hear what any of you are all doing with regards to your database and refis, right? If you're doing something, or you've got a different script, or you've recorded a video and sent it out, or you've sent an email out that's worked, I would love to hear that. I was talking to a loan officer yesterday who said he used one of my emails and got two transactions out of it. I'm like, all right, that's a score, right? That's two more deals. And so
awesome.
Although I'm not supposed to say deals, two more families helped. Sorry. I had a realtor friend told me not to call them deals. All right. No, they aren't deals. Two more families served.
That's right. That's right. It's a mindset. It's a mindset for yourself, no question about it. Well, so can you tell us what your email was? That I want to hear it because I don't know about it. I'd like to know, what is the email that you did that got someone to more families to help?
Well, I'll make a deal. I'll post it down below once we're done with it.
Awesome.
I can't remember what it said, but it was that my team sent out to our database had to be back in April or May. And so I will share that below. But ultimately, again, if I was going to do a video or an email today to my database, I would probably put a short subject line on there, like the Fed said what ? And then I would just do something with regards, right? Dan Rawich talked about it in here. So those of you who aren't using Rate Watch or watching, Dan Rawich is coming in here during the week and he's doing Facebook Lives, right? So he's telling you what's going on in the market. Now, Dan is brilliant. And so if you're not using his scripting, you should be, right? There's always something that you can take out of his videos. Typically there's a video and then also written commentary as well, and use that. So I'd say something like the Fed said what, and then I would look at what Dan said they said, but they changed the language in there you know, in what's going on. And now there's obviously people betting, will they or won't they lower at the next meeting, or will they or won't they lower till next year, whatever that is. But you get to take away from it what you want. And so what I would be doing is probably saying, the Fed said, what question mark? And I'd say, you know, it's, "Dear Jen, hey, just wanted to keep you updated as the Fed changed the language at their last meeting. This may lead to a change in interest rates, or this has helped improve interest rates recently. And I'd love to take a minute just to tell you how this will impact you and maybe reduce the cost of your debt." Boom, short and simple.
Done.
Today.
Yeah.
And again, the same thing you could do with a text. That would be, you know, something. Again, if any of you have done something, I would love to see it down below. You guys are all quiet in Facebook today, so maybe it's because Jen's been so brilliant while we've been talking.
Or that I'm talking too much.
No, that's all good. I always take, like I say, I take copious notes when you're speaking, but since you're not on video,
thank you.
look at the camera the whole time. I mean, normally I'm looking down like this, and because it's supposed to be like blank when you're talking, but that's all right. We apparently have it set so I can smile at you guys the whole time. So there's no nothing else I can do while we wait for.
Well, we can talk about some other stuff too, though, while we're waiting for Dan, and then we'll stop. You know, we'll stop when he's done. So I can suggest a couple things. Awesome. One is I want to talk about something called 5,500. Okay. And, you know, a lot of people come to me, you know, as I'm coaching and saying, look, I need more leads, I need more leads, I need more leads. And, you know, I know that we've talked about that plenty of times here, that, you know, it's not just about more leads. And of course we all want new leads and more of them, but there's really only a couple ways that you can increase your income. Okay. One is more leads, obviously. The second is higher conversion. And we forget about that, right? So it's like, I lost the deal, they went someplace else, and we're not stopping and thinking about, what is our sales strategy? You know, is it a soft skill or is it a hard skill? And most people will say, well, I'm losing loans because of rate, and they're going to another lender because they have better rates. Yeah, could be, but it could be your sales skills, right? And so we need to always be looking at that and saying, hey, could I increase my conversions? Because if I want to increase my income, I need to increase my conversions. The third is to, go ahead.
Can I interrupt for 1 second? So here's the big thing for me on conversion rates, right? What I tend to find is that we make 1 or 2 calls to somebody. We don't follow up, typically just 1. And so let me use the annual mortgage review strategy that we were talking about. I mentioned that my brother-in-law is brand new. He's been licensed now for almost 2 full months. And with him is I gave him a list of 400 clients that our team has served in the past who I think would benefit from a refinance. And he called the first person, right? He called the first time, and he would leave a voicemail. And then we set up in our CRM a 3-email sequence to follow up, to get them to respond. And then he had a task set for himself to follow up again. And so keep that in mind. Like, what is your follow-up strategy? Because I tend to find our conversion rates are weak, not because our scripts are weak, it's because our follow-up is weak. You know, I always said when I did Win by Noon, the reason that Win by Noon was a game changer for me, it's not because I got any better at what I did from a script perspective. It's not because I went out and got more lead sources. It's because I was more committed to the follow-up. And when you're more committed to follow-up, you get more conversion. So if you've got a target list of people that you want to refinance from your database, you can't just call them once and expect that they're going to respond. And so you've got to do the multi-channel. I would tell you with my brother-in-law, he's only doing 2 things right now: the call and then the follow-up emails, and then another phone call. As I'm here talking about it, because he's using Mortgage Coach, he's done a ton of TCAs. And what I'm thinking now is that I'm going to have him for the next round, for the ones who we know can save money, is create a TCA, throw a video on it, and shoot that over to him via email and via text, right? We've got cell phone numbers for most of these clients. And so that's going to be my next action plan. Set it here publicly, so I'll report back in a few weeks how that's working as a follow-up strategy. But again, I think those are the kinds of things I'd love to hear if any of you are doing this. I'm trying to see who's all watching and asking questions. I see a bunch of people on there. Steve Sims just posted solid. You know, when Steve Sims is watching you, it's a pretty darn good day. Steve is awesome. But, you know, so I think we lost Jen, so I interrupted her third point. So I'll keep talking. You know, I think conversion rates is just one of those pieces, right, of being consistent and blocking time. And, you know, really think through how are you doing that? Because the challenge with the refi quote, let's call it a boom, right? Or a refi cycle is that it's hard to keep our purchase. Oh, there she is. Keep our purchase business going while we're still really crushing it on the refi piece. And you've got to schedule that time in. So, all right, Jen, I didn't know if you were still there. So jump back in.
Oh, no, I was just, you can hear, I live in Washington, you know, near Washington, D.C., and there's a helicopter coming over. It's probably Trump going by. And I'll tell you in a minute if it is. Yep, it is. It's a Trump helicopter.
I thought it could be Guard Downs flying somewhere.
Yeah, no, they always travel in twos, you know, because you don't know which one he's in. No, I totally, you know, and I love that you just kind of jumped right in there because, you know, I was going in that direction too. It's like, what is your follow-up? Because, but also understand that sometimes conversions is your sales skills. So you have to be looking at everything. You can't just say, I'm not getting it, I'm frustrated, and it's because of my company's rates are too high. There's a lot of things that might not be in that conversion. So again, conversions. The third is getting more transactions. Okay. So getting more transactions. Now, what does that mean? It means, how do I get more from what I already have? Instead of one and done, how can I do one and one? How can I get more referrals from the clients I'm working with? How can I get more referrals from the partners that I'm working with? You know, the old adage of page 5 of the 1003, right? And of course, what we all do is, you know, we're very client centric, and we have all these collaborative people around us, you know, the financial planners and the realtors and the insurance agent and all these others. So how can I get more from a transaction, you know, or from a family, if you want to say it, but how do I get more from the transaction rather than doing the one transaction? That's how you're going to increase your income. The fourth way is to raise your prices. Now, I know it sounds really funny, but I definitely, you know, I think you all know I coach loan officers, but I also coach realtors, and I also coach solopreneurs. And so what I mean by raising your prices is, don't lower your prices, right? The realtors who say, you know, the client says, oh, I want instead of 3%, I want to pay you 1%, right? Or us, we say, you know, in order to get the loan, we're so hungry. In order to get the deal, well, how about if I just offer you a lower rate, you know, and we cut our rate, right? And we go lean on loans. And I'm saying, don't do that. If you're offering true value, then it shouldn't matter. And statistically, from a customer experience, I have a big workshop I do on this. Statistically, from a customer experience, you know, 89% of people don't care about the rate as long as they understand what kind of experience they're getting and you're adding value. Unbelievable. Unbelievable. They don't care about the rate. So if the rate is the issue, you're not demonstrating value.
All right. So I'm kind of excited. That was awesome segue sort of talk through, but we're getting close. I can see Dan Keller in his car.
Awesome.
Ready to join us. So how are you doing, Dan?
I am well. Can you guys hear me okay?
We can hear
you.
You.
And I love that I can see you because mine is not letting me see me, but it's good to see you.
It's really good to see you guys. Yeah, I am not in the office slinging refis like every other mortgage professional right now in the country. So, but I will be in the office here in another hour. So I just, you guys caught me on the go. Dave texted me this morning, and I'm honored to be on the call.
Well, it's kind of exciting. We've been talking for the last half hour sort of about refinances and really how to take advantage in your database. And, you know, we know you're so good at your database. We know you're so good at social media. Would love to kind of hear what you've been doing over the last, 30, 60, 90 days with your database, with refinances, and maybe some suggestions you have for the community.
Yeah. So I'm a big purchase guy, like most people in the mortgage coach community. And so this month, June, we're wrapping up, last day of the month. And I want to I'm telling you this so you can kind of frame the conversation. We're going to close 19 units this month. 17 out of the 19 are purchases. So I'm not jumping on the refinance bandwagon and literally throwing my purchase business and relationships with realtors and prospecting to the curb. What I am doing is, and I think this is important, this is why I wanted to jump on today. I have reached out to my database. And I have reached out to, personally, I have called every single loan. I think if you're a loan officer listening to this right now and you have not done this, you need to call every single loan that you closed in 2018 and 2017 today. Okay. And what I did is I sent out an email to my entire, a video email, and it was just really simple. And I actually shared it on social media. Basically, it was right after the Fed meeting. and just let everyone know that, hey, listen, you're going to get a ton of mail. Don't freak out right now and make a crazy decision and stop what you're doing and refinance your house. Take a step back, take a deep breath, talk to your mortgage professional. I'd love to be the one to do that. But the Fed basically said a couple of weeks ago, if you read between the lines, that mortgage rates are going to be pretty low for the next 30 to 45 days. So what I did, I put that message out first. I sent a different direct email to my past clients that said, listen, we are in an unexpected refinance situation. I have created, so the first email that went out with the video was basically me just saying, hey, listen, rates have dropped. I think this is an opportunity right now to take a look at your mortgage. It was super simple. The second one that I've sent out, and I'm excited to share this with you guys, is I've called something or created something called a mortgage dashboard. And I said, I've made a personal mortgage dashboard for your mortgage. So you're going to see a link attached. And basically it's a TCA report. And what it's got in there is column 1, it has their existing mortgage. Column 2, 3, and 4 are empty. So in order for me to fill this out, I want to have a quick conversation with you about your mortgage. One, I'd love for you to upload your most recent mortgage statement. And you guys, that email, I had 23, 24 responses within the same day with mortgage statements attached. And that was just I sent that out to my entire past client database, but that caught interest. And then I use BombBomb so I can actually see who opened the emails and stuff like that to go deeper. But that mortgage dashboard was something that really caught the eye and the ears of my past clients, and it led them to action. And then in order for me to fill this out and keep this active and ongoing, I just need your current mortgage statement. I want to make sure that my information that I have in my CRM is correct. And then I want to give you, hey, I don't know, are you looking for a rate term? Or are we looking to remove some PMI? And so that served me really well right now. But the last thing with all of this, you guys, is I'm setting, and I think loan officers need to understand this right now, don't throw away your real estate agent relationships, your purchase business right now, prospecting. Set proper expectations with your refinances. I'm saying, hey, rates are going to be low for the next 30 to 45 days. Let's take some time. Let's look at this. So what I'm doing with my refinances is I'm setting July expectations. I'm setting 45-day, maybe 60-day expectations that, hey, let's take some time. Let's look at this. And let's plan on, if it works out, hey, we're going to close this thing for you in the next 30 to 45, maybe 60 days. So it's not like, hey, we're going to bang this thing out. We got to close it this month to make our numbers look good or to just get you in.
I think that's huge, that last part. Yeah. I think all that was just gold. What do you say to the loan officer who's thinking, well, if I'm not Johnny on the spot and getting right to this person, they're going to go shop online and find some other lender?
Well, that's why my initial email, you guys, was such that, hey, and a lot of my messages, if you follow me on social media and the stuff that I share, is never pushing. It's never salesy. It's more like, hey, didn't expect this. Rates dropped again. And then hey, this is a good time. If you maybe have an interest rate over 4.25, let's have a conversation. And then I took the focus off of just lowering the rate to, hey, there's other reasons why we should maybe look at this. If you have PMI, if you were thinking about remodeling your kitchen, or bathroom, this is the time where, hey, it might make sense to draw on some of your home equity. So I took the focus off of, hey, I follow, probably 400 or 500 loan officers that I'm connected with on social media. And oh my God, I don't log into Facebook much anymore because all I see is, hey, rates are low. It's time to refinance. It's pushy. It's, hey, if you have a rate over 4.25, call me right now. It's a great time to refinance versus slow down, educate, and you're going to separate yourself too, because you have to understand, I'm a homeowner. I'm getting emails from multiple lenders. I'm like, how'd you get my information? I'm getting direct mail. Everyone's pushing and marketing low rates right now. Let that just be noise. Let that maybe multiply the attention to the subject. But then they have a refreshing message from us going, hey, there may be multiple reasons.
I love that. And one of the things I'm visualizing for you, because you do so much video, is if you're getting all these email or this direct mail in the house, and if you're in a neighborhood, go ask them for all the direct mail and hold it up in, here, let me get myself on. Yeah. Kind of hold it up with fanned out and going, is this what's happening to you?
Yep.
Right. And so differentiate yourself. And I absolutely love that. One of the things that I always say is slow down to speed up. Don't speed up to slow down.
Yep.
And if you're acting like a cat on a marble floor with refis, and we definitely want to take advantage of this, but if you're going to do that,
Yep.
you're going to end up slowing things down, because your future is
Yep.
a series of nows.
Yep.
And if you stop working with your realtors, your future is not going to be doing purchase transactions another 90 days from now.
That's it. That's so true. And I think that's what we all need to be thinking about right now. I mean, you just nailed it, Jen. I think we as business people, I think this is a message just to anyone. What you do today, you're going to reap the benefits or the consequences 60 to 90 days from now. So if you totally disregard your realtors, because, hey, I've had 2 or 3 realtors lately going, dude, you must be slammed right now with refinances, rates dropped, don't forget about me. And I'm like, no, yes, we're busy. The way that I also approach my business too with my team, if we're going to do refinances and I'm going to take on 5, 10, 15 refinances, I'm doing it after hours. It's overtime for me. My 9 to 5, if you will, is I'm a purchase money lender. And that's my message. Those are our core values. We serve our realtors and our buyers. It's the largest financial decision of their life. Refinancing is something that I will do after 5 o'clock if I have time, or on the weekends when I make time. So, but I think you're spot on with the whole 60 to 90 days down the road. We're a product. Our success right now today is a result of what we did 60 days ago.
Well, I love that too, guys. Like, that's a great script if you're doing any speaking in front of realtors. Use what Dan just said. Hey, I'm a purchase-focused lender. So if your lender is off chasing refinances, I'm here to help you, right? There's no better script than you can use right now than that with your realtor partners and prospective realtor partners, because there are a lot of loan officers who've not talked to them in a month or two because they're so busy on the hamster wheel.
Yep.
Well, and I think, the other thing is sticky habits, right? I mean, we need to be always developing habits that stick. And what Dan's talking about is, in your analogy here, in your 9 to 5, is that these are your sticky habits. These are the habits that stick and that give you a foundation that you can rely on, a business that you can rely on. Chasing refis are sprinkles on a cake, right? We're talking about having the great cake, right? And so I think that also is something that's really, really important for people to understand too.
Yeah. I'll share this with you guys. I was just at an event, a private event this last week in Minnesota with Renee Rodriguez. And we're going to talk about this in the mortgage coach community because it was so valuable. But there was probably four mortgage professionals out of 10 people in the group there. And Renee had a message, and he was talking about something, and he called me out on the spot, and he didn't know what the answer was going to be, but I think he thought he knew the answer. And he said, hey, Dan, right now rates are low. It presents an incredible opportunity for refinances, right? More business, right? And I said, absolutely. He goes, right now, what are you, how's your business look? What are you closing? I said, right now, we're going to close, approximately 20 transactions this month, and 16, 17 of those are purchases. And he said, great. And he has a background in mortgage. And he goes, great mortgage professionals know that their lifeblood, their lifeline in the industry is serving realtors and serving home buyers. And he goes, how excited are you for refinances right now? And I said, honestly, I hate low interest rates. I hate it. I've wanted rates to go up to 5.5 for years, because that's where I'm going to come in and I'm going to take over market share, because the other, I don't want to say this to really offend anyone, but vultures, people that are just taking advantage of low interest rates right now, they're not here for the long haul. So I say this because as a mortgage professional, stick to your values, man. Stick to who you are. Yes, we have an amazing opportunity right now to cash in and to put a little bit of extra money in the bank to maybe serve our clients very, very well. But don't lose sight of who you are. We serve realtors. We work with home buyers at a super high level, and we take really great care of our clients, our past clients. And when rates drop, we're going to help them out if there's an opportunity.
Yeah, I think that's important. And, we were talking about this before you got on, is, it's having your practice. And I always call our business practice because, if you're truly a professional, you have a practice, but having your practice be by design and not by default. And when you start jumping in and becoming, and I do, hey, look, there's low hanging fruit, we're going to take it. Right.
Yeah.
But I do think that, that those that just, you know, say, oh, well, now I'm busy because I have a whole bunch of refis, your business is by default. Yeah. And if you were suffering earlier this year because you didn't have refis and you didn't go out and create those relationships, you're going to continue to suffer.
Yeah, exactly. You know, hey, Todd, real quick. So what I want, if you're listening to this, Dave asked me this morning to share what I'm doing, and so did you when I got on the call. So don't lose sight of the fact that I'm not saying I'm throwing refinances to the side, and don't lose sight of the fact that I'm not super pumped right now to go close an extra 10 or 15 more transactions as a result of low rates. So let me share with you again. I want to recap my strategy. If you're on this call, you don't know what to do, you don't know how to reach out to your clients, or you want a strategy around that. One, create a short video message. All right. Create a short video message that's about a minute long and just say, hey, we're experiencing something unexpected right now. There's been a recent drop in interest rates. And what that has, there's a lot going on in the economy right now. I want you to lean on me for more updates on that. But right now, the reason why I'm making this is if you have an interest rate, a 30-year fixed rate that's over 4.25%, or if you're paying private mortgage insurance, or, you know, if you thought about pulling some money out of your home equity in the last year and you just didn't pull the trigger on it, now might be a time to save a lot of money in regards to your mortgage. I do mortgage checkups with every single one of my clients annually. Normally, I would wait to make this call, but because of the current market situations, I'm reaching out to you right now. The only thing I need from you is your mortgage statement. So if you want to reply to this email and attach your most recent mortgage statement, I'll take a look at it. I'll get you a report, a total cost analysis with some options, and I'll follow up with you. Okay. So that's the first thing that I would do. I use BombBomb. There's numerous other video marketing software, I guess, out there. Code Video, BombBomb. If you don't have the money and you don't have access to that right now, make a video, put it on YouTube, use the link, and put the link in an email. Okay. So that's the first thing that I would do. I would get a message out on social media, just saying the same thing. Okay. Maybe adding some commentary about the Fed. If you want some information on that, go to my personal Facebook page and you'll see the 1.5 minute video I did kind of summarizing the Fed meeting a couple weeks ago on what that means. Read between the lines. And the Fed says that they're holding the Fed funds rate until July, which in July, there's like an 85% chance they're going to drop the Fed funds rate, which indirectly could impact mortgage rates even more. And then what I would do, lastly, call every single closed client from 2017 and 2018, and I would even just do current, just to check in so they hear your voice, and they know what's going on in the market. Do those 3 things, and you'll add another 5+ transactions to your July and August pipeline, I promise you.
That's huge, right?
Awesome.
Like, that's worth of the price of admission for today's call. Just that right there. That was huge. I think that's what the community needs, Dan, is stuff like that. Just actionable, scripted, like, you know, he's saying, go swipe and adapt it, you know, from him.
Yep.
I love the fact that you're saying, hey, it's not too late, right? You've set yourself up to be steady versus be frantic and overreact. Yep. That's huge.
Yep.
Love it.
Yep.
So what else are you thinking now as you're heading into July? Is there anything that's the next step, or, hey, all right, this is my next video that I'm going to post, or my next email I'm going to send?
Yeah, I'm going to keep it Fed friendly. I'm going to keep it, you know, everyone's hearing the news about the Fed. It doesn't matter if you're in a hotel lobby or you're in a restaurant, you're going to see the CNN, you know, at the bottom of the headlines. And so people are talking about the Fed. They're talking about the economy. I think if we can be that voice of understanding right now, I use the approach in my life and my business where it served me really well as I learned the mortgage industry 10 years ago, to keep things at the 6th grade level. I actually have a 5th grader. And so if my kid couldn't understand it, then I probably need to slow it down or dummy it down a little. So I would do that. That's my best advice right now is going into July and August. Remember though, you also got to remember your core values and who you are. I'm a purchase money lender. I deal with real estate agents and home buyers. That's who I am. And so don't all of a sudden make your next 5 videos, your next 5 emails on refinances. Okay. Stay positive in regards to, hey, if you were thinking about buying, and you were frustrated last year with inventory issues, maybe home affordability, use the Mortgage Coach total cost analysis to show, hey, a drop in 0.5 percentage point or a point gives you X% more buying power, X number of dollars more buying power. So, hey, listen up, first-time home buyers. if you were dealing with credit issues, maybe in the past, or if you're dealing with saving up for a down payment, let's explore some options, because right now you're going to look back in 2 or 3 years, if you were to wait and be like, doggone it, man, I wish I would have bought in July or August of 2019 when rates were in the upper threes versus locking in a 5.5 or 6% 30-year fixed. So I would the rent versus own, the cost of waiting analysis. I've done numerous of those. And in fact, give me a couple of hours and in the comments, I'll post a couple of my cost of waiting reports. That's what I would do. I'd be doing short 1-minute videos on that. Stay true to your core values, who you are as a lender, and continue to work with real estate agents and get that message to realtors and have them share that for you as well. Because realtors are seeing the opposite. Realtors connect with a lot of lenders on social media, and they're seeing every lender right now talk about refinancing. Stand out, talk about purchasing and how great it is. What an incredible time it is right now to buy a house if you're a first-time home buyer.
Well, I love that, because again, you're talking about rates being low and affordability being better. It's gonna resonate with the people who are refinance people. Would you throw a refi call to action at the end, like, oh, and by the way, if you own a home and you're not thinking of moving, call me for a quick review, or do you think that's overkill? Well,
I'm crystal clear on messaging. So if I'm doing a message on moving up or the cost of waiting to buy a home, I'm going to keep it in line with, and if you want to learn more about this, or if you were considering buying in the last year and for whatever reason you chose not to, I'll tell you what, when interest rates drop a percentage point or a 0.5 percentage point, it changes the dynamic of a mortgage payment in regards to affordability. So I'd love to be the person just to have that conversation with you and talk about that. So I keep it congruent with my message, but it doesn't hurt in those messagings in another video. Maybe do 2 to 1, 2 purchase videos, 2 purchase social media posts to 1 refinance post. But sooner than later, your following to see that, wow, rates are low. Like if I was thinking about buying, now is probably, oh my gosh, I save $400 a month. That gets me an extra $120,000 home by buying now versus waiting. Wow, I never thought of that. And even if they own a home, they're going to see other videos from you too about, okay, man, Dan's really talking a lot about free money right now, saving money right now. I'm not really seeing that. All I'm seeing is, hey, you can refinance to 3.875 right now. They're seeing ads versus education. And when you educate, you get the gears turning in people's minds going, oh, wow. And then they go to work and they have water cooler conversations and they start talking about that. And so what I try to do at the end of all my videos is, hey, do me a favor. If you hear of anyone that's talking about this right now, share this video, make an introduction. I would love to help your friends and your family members better understand their options. So that's kind of how I frame call to actions in my videos. I keep it congruent with the message.
So there's that's just gold, guys. Like, I just love it. First off, crystal clear on messaging, right? Dan's not confusing it by trying to put multiple things and squeeze it into one video. I loved ads versus education, right? I mean, we're in education-based business. That's what Mortgage Coach and the TCA does for your clients. And then I love that last, hey, do me a favor, right? Because I think we all struggle with asking for referrals, right? I think that's just a genius way to do it.
Yeah. It's incredible. I'm going to share with you a real quick tip before I get off. You guys, if you want to know the secret of getting referrals from your clients, in your mortgage planning meeting, when you sit down with them for the first time and they're not necessarily a client of yours, you haven't closed their loan yet. So I'll give you an example for a purchase transaction. I run them through a mortgage planning meeting. Through that mortgage planning meeting, I use Mortgage Coach TCA. I have my value proposition clearly laid out in that meeting, everything that we're going to do for them, but I make it super clear. I'm going to make 3 promises to you. Okay. And in return, I'm going to ask for 2 favors. The 3 promises are that we're going to communicate every Tuesday and Friday with you. Okay. We're going to close on time every time. And if we don't, I've got an on-time closing guarantee. Okay, if we miss that date for whatever reason. And lastly, if I quote a rate and a fee and that changes, I reach into my pocket and I pay the difference, period. Okay. I'm a man of my word and I stick to my word. 68% of the time in the mortgage industry, according to Fannie Mae, that doesn't happen. And borrowers are frustrated at closing because things change. That doesn't happen with me. Okay. And they're like, oh my God, this is literally, you guys, this is a game changer when you're in a meeting with a new client. I go through the rest of the presentation. At the very end is when I have a piece of paper, I reach into the folder and I pull out a piece of paper, and it's my form called I Need Your Help form. And what I say at that time is I said, hey, remember we talked about my 3 promises that I make to you, and I'm going to meet those. When I meet those 3 promises, I'm going to ask for 2 things in return. 1, I'm going to ask you to go to social media, to my Facebook page or to my Yelp page, and give me a 5-star review of your experience. Can I count on you to do that? And they're like, oh my gosh, absolutely. Yes. Oh, we love Yelp. Great. The second thing that I'm going to do, and now I push across this piece of paper, is my I need your help form. I'm going to need your help. In order to make true on these 3 promises, I can't be out marketing and pounding the streets for new business. My team puts all of their resources and effort in serving you and making sure that we follow through on these 3 promises. So I need your help. In the coming 12 months, and on this form, you're going to see 2 lines. In the coming 12 months, can I count on you to introduce me to 2 people that I may help buy a home or refinance a home? And I cannot tell you a time where I've had a customer say, no, I can't do that, Dan. So what I'm doing right there is, unlike other mortgage lenders, is they give it to them, they make it awkward, and they ask them to put 2 names down there. I had a financial planner do that to me one time, and it was a complete turnoff. So what I do is I give it to them. And then when I close and we exceed those 3 promises, I ask them, hey, remember that I need your help form. When we deliver pizza at closing day, I follow up with them. Did you get your pizza? How was it? Oh my God, it was amazing. Great. Hey, remember that I need your help form. Have you run across any friends or family members or coworkers? No, not yet. Great. When I do my 30-day, my 60-day, my 180-day, and my 360-day follow-up calls to them, I'm asking them. So it doesn't make it awkward to ask for referrals if the seeds have been planted up front. Does that make sense?
Dude, that is huge.
Bingo,
right?
Bingo, of course.
Dave Savage, boom, right? Like that was just, like that was, I said gold before, like that was platinum, right? Because again,
cool.
Scripting is what scares all of us. And so, Dan just served you guys up on a platter, like how to be a better referral seeker from your clients. So that was awesome.
Right. And I think, and I think the key is, and it's something that everybody in this industry for years and years has talked about, is you can't ask for referrals at closing or after closing. You have to set the tone and the expectation and the seeds all up front. That's when you're going to be asking for it, not when it's all done, because now they're done, they're served. And that reticular activator isn't as active.
Correct. Yeah.
Right.
Correct. Timing is so important.
Oh, it's big. It's absolutely big. Yeah. You know what I love you're doing is you're edu-selling.
Yeah.
You're educating and selling at the same time. And that's why, you're so successful, is you're not selling. You're not just educating and not asking for the business and being a servant, right? You're doing both. Yeah. You're doing both. And that's what we need to do.
Yeah. Well, Dan, I'm super grateful for you jumping on from your car before you got to work. I just cut you off and you were going to say something, so I'll shut up.
You're good. No, you're good. This call was gold. You guys are incredible. And anytime I can jump on and help you guys out or just share, I'm game.
Yeah, super, super grateful for you taking the time. I know you're so busy. So, all right, guys, make sure you guys are all commenting below and giving Dan some of the props that he deserves for sitting there eager to get his car started and get out of Dodge so he can get back to the office and serve his purchase clients. Yeah. And I just think that there's the value out of the community is so appreciated, and I want to make sure that I'm saying thanks, not just on behalf of Dave and I, but on behalf of the whole.
Yeah. Thank you so much. Thank you so much.
Love you guys.
So go out and implement. Go out and implement today. That's the key. This is not Netflix. Don't just watch it, right? I call it book and block. Book the time to come here and block the time to do it.
All right. So here we are. It is 9:59 Pacific time. It is time to wish you all farewell and give you guys an action plan. Action plan number 1 is rewind back to when, well, you can rewind all the way to the beginning, but at least rewind to midway through this when Dan got on and then start writing down what his process was and go execute, right? Go back towards about 10 minutes ago where Dan talked about how he's asking referrals up front in the first meeting and what his follow-up is, and then implement that today, and then block some time next week to go ahead and launch into the program, maybe even this weekend, of what Dan talked about or his videos he's done in his email follow-up. There was tons of great information in this call. I want to thank Jen for being here. Thank you, Dan, on behalf of Dave Savage and myself. Thank all of you for being here. We'll see you next week. And last time, don't forget, Dave's got some great call he wanted me to tell you about. Be here on Tuesday because he's got somebody that I'm supposed to tell you is on here. This is my failure as a host. He is having Jacob Gibbs on here, and he says it's going to be amazing. So
nice.
Up on me, but go ahead and be here for Tuesday for Dave as well. So I appreciate all of you guys. Have a good week.
Have a great week.
All right. Bye, guys.